Listen to me. We need to talk about your money, and we need to talk about it right now because 2026 is right around the corner. I want you to sit up, pay attention, and really hear what I am telling you. For years, I have told you that you must be a warrior when it comes to your finances, and there is no greater battle than the one you have with the IRS over your required minimum distributions, your RMDs. The fear I see in so many of you is palpable. You are afraid of outliving your money, and you are terrified of making a mistake that results in a massive penalty. And you should be concerned. Because if you don't take your RMD for 2026 correctly, the IRS is going to come in and take a massive bite out of what you've worked your entire life to save. But I don't want you to be afraid, I want you to be informed. Knowledge is the antidote to fear. Let's get crystal clear on the when. Thanks to the Secure Act 2.0, the rules have shifted under your feet. If you were born between 1951 and 1959, your RMD age is 73. If you reach age 73 in 2026, that is your year. Now, if you are already older than that, you're already in the rhythm, but don't you dare get complacent. The calculation changes every single year because you are getting older, and hopefully, your account balance has been growing too. The question I get asked most often is, Susie, how do I actually do the math? It is so much simpler than the experts want you to believe. They want to make it sound complicated so you'll pay them to do it. No! You are going to do this yourself because nobody cares more about your money than you do. To calculate your 2026 RMD, you need two, and only two, numbers. First, you need your total account balance as of December 31st, 2025. Not today's balance, not the balance in the middle of 2026. You look at that year-end statement from 2025. That is your starting point. Second, you need your distribution period. The IRS provides a Uniform Lifetime Table. It's a list of numbers that represent how many years the IRS thinks you have left to live. For 2026, you look up the age you will be on December 31st, 2026. If you're turning 73, that number, your divisor, is 26.5. If you're turning 74, it's 25.5. Now, here is the math. Take that account balance from the end of 2025 and divide it by that life expectancy factor. That's it. If you have $100,000 and your factor is 26.5, you must take out $3,773.58. Not a penny less. If you take out less, you are looking at a penalty that used to be 50%, and while it's been reduced to 25%, or 10% if you fix it quickly, why on earth would you give the government 10% of your hard-earned money for a mistake that takes 5 minutes to avoid? I want you to be very careful here. If 2026 is your very first RMD year, the law says you can wait until April 1st, 2027, to take that first payment. But listen to me, just because you can do something doesn't mean you should. If you wait until April of 2027, you still have to take your 2027 RMD by December of 2027. That means you will have two massive taxable distributions in one single year. That could push you into a higher tax bracket, it could make your Social Security taxable, and it could even increase your Medicare premiums. Do not fall into that trap. Take your first RMD by December 31st, 2026, and stay in control of your tax bracket. And what about those of you who don't need the money? You've been responsible, you've saved, and now the IRS is forcing you to take money you don't want because they want their tax cut. If you are 70 and a half or older, I want you to look into a Qualified Charitable Distribution, a QCD. You can send up to $111,000 directly from your IRA to a 501(c)(3) charity. It counts toward your RMD, but it doesn't count as taxable income. It is the smartest move you can make if you want to give back and keep the IRS's hands out of your pocket. You have worked too hard and waited too long to let a simple math equation ruin your retirement. Take out your statements, find your birth year, and mark your calendar. Being a warrior means taking action before the crisis hits. You can do this. I know you can.